Tyler, let's jump right into it. It's Monday. Where are mortgage rates right now?
Hey, Tiana. So mortgage rate as of today is 7.631. That's a 30-year fixed conventional financing. So it did go up since last week. We got the employment report, and it was a surprise to everybody. They're expecting 170,000 new jobs, and it ended up becoming 336,000 jobs. So
Wow.
that definitely, yeah. So that with that data, the rates was not great. So it did jump up a little bit.
Right. And one of the things that, I was mentioning to you is it's
Yeah,
funny because in every single market we've kind of gone through over the last three
yeah.
years, people just keep saying, don't buy, don't buy. It's not the right time. It's not the right time. So,
Mhm.
like in 2020, the world is going to collapse. Don't buy real estate now. In 2021, rates were still low, prices were going up so high, and people were still saying, don't buy, don't buy. The economy is going to crash. You're going to lose all your money. Don't buy. And yet here we are in late 2023
Mhm.
where prices have not budged
Nope.
and interest rates continue to go up.
Yeah.
Has the market softened? Absolutely. There's no doubt about that.
Yeah.
Like we
Yeah.
both see that.
Yeah.
But it's still a good time to buy if people have to buy,
Oh
right?
yeah, 100%. And again, I think we talked about this before. It's just every market has its opportunities, right? So,
Right.
like for example, 2020 when COVID hit, when people were still buying, the following year the appreciation levels just skyrocketed, right?
Right.
And then in 2021, people got really the lowest interest rates like in history, right? So again, every market has its opportunity, and I think with this market just softening up, that you can get your deals. You can get a better deal on these homes, right? And for people that are first-time home buyers, especially, this is the time for them to be able to get under contract, right, and not have a bidding war or whatnot. So,
Right.
but yeah, but
And if somebody is going to leverage, let's say,
mhm.
seller credits to do a buy down, they still have to qualify at today's rates, right?
If they do the temporary buy down program, you are correct. They still have to use the today's rate to qualify for with the debt to income ratio. Yes.
Got it. Okay.
Mhm.
And for some crazy reason, like, do you see any changes happening later this year? Like, could we go to 8 or 9%?
Honest truth is we're almost at the 8% range right now. Do I see nines? I wouldn't doubt it. There might be a chance, but is that I would say it's a crapshoot to be honest. But
Yeah.
right now they're talking about pumping the brakes on the rate hikes. This coming November. So we'll see. Just with all the uncertainties with Israel and everything else that's going on in the world, they might put a pause on it. But again, we see this. I think I was reading an article on Housing Wire that they project this to be another year. Maybe by late 2024 is when we'll see, the rates might go down. Maybe we'll get into a mild recession. That's what they're mentioning. So.
Mm-hmm. And are you getting a lot of questions from
Mhm.
buyers asking if they should wait?
100%. Yeah. I get a lot of those questions, especially even from investors. Some of the investors like, "Hey, Tyler, is it a good time to buy?" And at the end of the day, I always tell them, "Hey, if the numbers work out for you and you need to buy this, as a tax write-off or as your first home and you're tired of renting or you're tired of staying with your family member or whatever, then you buy, right? But the numbers, as long as it works out for you." The good news is, when buying a home is one of the best investments that you can ever, purchase, right? So again, it's going to appreciate over time, and we're still seeing appreciation. It's just not 15% or any outrageous number, but it's still 7 to 10% as the
Right.
Zillow reports show. So
And speaking of investors, Fannie Mae just
Mhm.
announced their new loan program, right?
Huge. So remember this date, November 18th, 2023. You'll be able to put 5% down buying multi-family homes with conventional financing.
And that's just for primary residents?
Correct. That's only for primary residence. So the other units, if you're buying a duplex, as long as you can use rental income for the future rental income from that unit to qualify, which is amazing. So,
That's amazing. So
mhm,
it's like house hacking, right? If you buy multifamily property, you live
yes,
in one unit, rent out the others, you could put as little as 5% down,
yes,
different from the 10% that people would have to put minimum.
yeah, and because for some reason, conventional loan are big sticklers on a larger down payment when it comes to primary residence, multifamily purchases. So they have a home possible, a conventional home possible, and you have to be a first-time home buyer. There's a median income you would have to qualify for to get the 10% down. Traditionally, for conventional financing, is 15% down for primary residence. So this is a game changer, and for you owners out there that own multi-units, this might be a good time to list, because you'll get a lot of increase right now for it.
Absolutely. Well, Tyler, I appreciate all your insights. If you guys have any questions whatsoever about the mortgage industry or about real estate, please feel free to reach out to Tyler or myself.